All right, so we don't want to keep everybody waiting, and let's go ahead and get started. I'm Kyle Sadler, if y'all don't know me. And actually, we asked Heather to come on this month's Tuesday Talk. Heather Garza, I've known Heather since about 2013, so roughly about 10 years. We've built up a great friendship. And so we wanted to ask her to come on today. You know, a lot of people know me for my background being in public accounting. Well, what ended up happening is I can't keep up with the tax code. I mean, if you look at a tax book or a tax code, I mean, it's thick. It's ridiculous. I can't keep up with it. So actually, Heather handles our family's tax preparation and tax strategies. And I mentioned tax strategies because that's really key. It's not just about, oh, preparing a form, you're done. It's also figuring out ways on saving taxes. So that's why we've had Heather come on. Whenever y'all call the office and y'all sit here and you ask a tax question, I'm taking that question and taking it over to Heather. So that's how strongly I feel about Heather's competence in this information. So I encourage everyone, if you aren't using Heather, find a competent and experienced tax preparer, because I just want to throw out that warning of those discount tax preparers out there. We won't have to name names, but those companies out there. I remember grandma's wisdom, and that is you get what you pay for. And a lot of times those are ones where back from my experience in public accounting, where we were having to go back in and settle those disputes and settle those mistakes. So I'm going to turn it over to Heather. And Heather, thank you so much for being on. And everybody, this is a conversation, not a presentation. So if there's something that Heather speaks on and that you're like, whoa, 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 ask a question, feel free. So Heather, the floor is yours.
Hi, thank you, Kyle, for the introduction. Yes, I just want to thank you for asking me to be a presenter. I have been in accounting for over 25 years and doing taxes for over 20 years. And I appreciate you mentioned about doing, how do I explain? Planning, right? And that's what I really want to talk about today is, when we're talking about taxes, right now, everybody's preparing their 2022 taxes, but there's nothing that can be done for 2022. 2022 is ended. And so now you have to look forward to 2023 and do all your planning in 2023. So right now, today, what I'm going to prepare is what I prepared to present to you is things that are taking effect for 2023. Okay, so let me go ahead and share my screen. I have a presentation. And I hope, hold on. Oops, wrong one. Let me stop sharing this. I thought I chose the right one. Should be this one. There we go. And it still keeps coming over here. I apologize for that. I don't know what is going on.
Well, Heather, what I'm seeing is what you pulled up originally.
You do see it? I don't see
Yes.
that I have it on here. It shows that it should be on outline.
You got it.
You got it? You see my presentation? Okay, sorry about that. Okay, so let me know. Do you see this clean vehicle credit right now? Okay, great. So I'm just going to talk about the changes that are affecting for 2023. So one of the big changes is the clean vehicle credit for electric vehicles. And they have made some changes. So right now, if your income, if you're married, filing joint, or a surviving spouse, income less than 300,000, head of household less than 225,000, and single or married filing separate, less than 100 or equal to or less than 150,000. Now this credit is worth $7,500. Okay, so to qualify for the $7,500 credit, though, it must be a four-wheel vehicle. It must be a street vehicle. So like a golf cart is not going to qualify for this. Okay. It must have the minimum battery capacity of 7 kilowatt hours. I don't know what that is, to be honest with you. But if you go to the dealership, they're going to know what would qualify. It must be acquired for original use by the taxpayer. So that means that you must be the original owner. It cannot be used. The final assembly must be in North America. And then there are MSRP requirements. So it must be equal to or less than 80,000 for a van, SUV, or pickup. It must be less than or equal to 55,000 for other vehicles. And then it has this critical mineral and battery components test. Again, I don't know what that is, but you go to the dealership and they have all this. And then there is a link for where you can find these qualifying vehicles. And so can everyone see here the IRS website? Kyle, I'm sorry, I can't hear you.
No, we can't see it.
You can't see it. See, I don't think it's on the right page.
You have to share the screen.
I think you have to like unshare and then share again or something, like when you're changing screens.
Okay, hold on. How do I do this one? Let me see. Is this working now? You see it? Okay. So I put this link here, and if anybody needs it, they can always call me or call Kyle. And it really will go through all the manufacturers and what is available for you to take if you're doing your research. Okay, and you can just click on this and it'll tell you the model year, the vehicle description, and so forth. Okay, let me get back to, all right. So some other requirements is that the seller has to provide you with some information. It will be a report that has your name, the vehicle identification number, whether it meets all of those requirements that were previously discussed. And then a new option that's available for 2023 is that the taxpayer can choose to transfer that credit to the seller or the dealer to take a rebate instead of claiming it on the tax return. However, you're still subject to those income limitations. So you would have to recapture that on your tax return if they give you a rebate and your income is out of those limits or exceeding those limits. Okay, something else that's new for 2023 is that there is a credit for previously owned clean vehicles. We've never had this before, and it does need to meet those other requirements previously discussed, but it's eligible for $4,000, and it must be a model year which is at least 2 years earlier than the calendar year in which the taxpayer acquires it. Okay, and then the taxpayer could not have been allowed to take the credit for previously owned clean vehicle during a 3-year period ending on the sale date. Required minimum distributions. This is another big change for 2023. So beginning in 2023, the required minimum distribution age is 73. Okay, and that's going to increase to age 75 in 2033. Another thing is that the penalty has always been really huge for not taking those RMDs, and it had always been 50% of whatever the distribution should have been. And so now they've reduced that to 25%. And then also, if you correct it in a timely manner, although they haven't stated what the timely manner is, it can be reduced to a 10% penalty, which is pretty big because everybody's always been, that 50% penalty is huge.
So
Okay.
Heather, just to clarify, if they missed it in 2022, 50% penalty, if they didn't do it in 2022, but if they miss it in 2023, then
that is correct.
Okay.
Then it's a 25% penalty. Yes. So again, all these things that I'm talking about are relevant to only 2023. If it's 2022, I will let you know. And I think there's some things that I put in here. Okay. So the 2023 energy credits, this is also a pretty big change. Part of it is the home solar energy credit. Okay, it was supposed to be 20. So this does, I will mention this. It was supposed to decrease to 26% for 2022, but they actually did increase it back to 30% in 2022, and it will be a 30% non-refundable tax credit through 2032. So you have to have a tax liability to take the credit. And that would be 30% of the purchase price. Okay. So here's another big change. It's the energy efficient home modifications. So previously your lifetime credit was $500. That's all you could take for your lifetime. And it was 10% of the cost. So now they have increased it to an annual limit of $1,200, and it's 30% of your cost. Okay, and these costs can be, and they do break it down. So the max would be $600 for residential expenditures such as windows or skylights, $250 for an exterior door with a max of $500. There is the $1,200 credit can be increased by another $150 if you have a home energy audit. There's a $300 credit for the residential qualified energy property expense, which really that would be about maintaining those things. So say you had the solar panels and you had to do any type of maintenance, those expenses, 30% up to $300 could be taken as a credit. If you were to put like a heat pump, water heater, again, all these need to be energy efficient. Stoves, boilers, the max is 2,000, so 30% of 2,000. But you can no longer use your roof as a credible purchase. But another change is that you don't have to be the homeowner to take this credit. So you could be a renter that's done these, and as long as you're the resident, then you can take the credit on your tax return. And that's pretty much all I have for today. Again, I just wanted to kind of go over the 2023 changes, the things that I think would impact people the most, or the credits that they could take. So I'm pretty much just going to leave it open for if anybody has any questions. Sorry.
Okay. So here's my question, because
Okay.
we deal with several people, and kind of before this call, I had mentioned this. We have several clients that are up there in age, and we're talking about RMDs earlier in that change. However, we're still subject to it. Now, what is that penalty? Go back over that penalty if you don't take RMDs, and what all do you have to take RMDs from? Required minimum distributions. What all do you have to take those from? Can it be cumulative? Does it have to be from each account?
Okay, very good question.
A lot right there.
Okay, so the RMDs need to be taken from any retirement account that has pre-tax dollars, right? So if it's a Roth, you're not required to take an RMD because you've already paid taxes on those. So a 401k, a 403b, an IRA, anything that has pre-tax dollars that you've put into this retirement account needs to have an RMD. Now, you don't have to take an RMD from every single retirement account. You can just get the value of all of your retirement accounts and determine what that RMD is and take that RMD from one account. What were the other questions, Kyle? I'm sorry. Oh, the penalties. You want me to go over? I'm sorry, you're on mute.
I'm sorry. The penalty if you don't take it. Yes.
Okay, so the penalty is 50% of what your RMD was. So if you had all your cumulative accounts and say you calculated your RMD to be $10,000, okay, but you failed to take that $10,000 RMD, then your penalty would be $5,000. Okay, and something that's that I don't know if a lot of people know this, but say you were 72 last year, you can, and that was your first year to take your RMD. You do have until April 1st of the following year to take that RMD without being penalized. But you do have to know that you'll be taking 2 RMDs within that year. So you have to take one by April 1st of the following year, and then you have one more you'll have to take before December 31st. Okay.
Hi, Heather. This is David.
Yeah.
My camera is not working so well today for some reason.
That's okay.
I was wondering if you could touch on, there seems to be a lot of changes in the Secure Act for small business owners trying to promote 401k plans or retirement plans. Could you
Okay.
touch on some of those changes and then remind us if for business owners, if they start something new, isn't there
There are some incentives.
$500 credits and things? If you
No,
could touch on that for us.
I would love to touch up on that for you, but I didn't do enough research for this to do that because that is so new and it's something that goes into effect this year. So, but I do know that there are some incentives for small businesses, but I don't remember exactly what they are, so I don't want to give you wrong information. Oops. Anything
Yeah.
else?
Well, in that vein, I'm not that familiar with multi-employer plans.
Mhm.
Have you counseled any clients on that area? I don't know how they find a multi-employer to join in to share admin costs.
So the multi-employer plans, typically those type of things I've found are through like Insperity or something like that, where they're offering some type of PEO service where they're going to handle everything. And that's how it's going to be, that multi-employer plan.
Okay.
Hold on. Like I said, I pulled up this research. Let me see what there was for, if I could find that credit for the retirement. Yeah, I know there was a whole bunch of information on it, and I was going to present, but I was like, I didn't know if I would have any business owners, so I decided not to.
Okay.
So I apologize for that.
Hey, Roger, any questions on pastoral allowances? Marlon, questions on the small business right here?
You have you receive an allowance?
No, if that's you're referring to, if I was in a pastoral situation, but I'm not. So,
Okay.
Nice question. Would be a good question if I was, but I'm not.
Well, go ahead and ask it, because that's those things that people normally don't ask. And I see this a lot whenever it comes to pastors out there. So what question was that you had on your mind?
Well, I didn't have a question, but if let's say, for instance, I was in a pastoral situation
Mm-hmm.
where I was receiving allowances for, say, a car or a house.
Mm-hmm.
That there's no manse from the church, but they're giving you an allowance for those things. Or if you were in a situation where they don't provide, the church is not providing say a medical plan, so you're purchasing your own. They give you an allowance for a medical plan, but they don't provide the plan per se.
Mm-hmm.
Is there? I'm
So,
not in that situation, but
right. So typically when it comes to something like that, what happens is you're given the allowance, you claim it on what's known as a Schedule C, and you take your expenses. The only thing is that typically with those allowances, you are responsible for paying Social Security and Medicare on those.
But not taxes.
But not taxes. That's right.
Yeah, good. What is, I mean, I know I'm hitting you hard.
Okay.
There's so many different limits and all that. What is the limit right now for pastors?
Well, really, it's not necessarily a limit. It has to do with, can you justify those expenses? So it has to do with the actual cost and what they're providing you the allowance for.
Okay.
And you just have to justify that that's what the cost is. So as long as you have a receipt and you have the justification for it, then it's not an issue.
So if you were to pinpoint, what is the most common overlooked deduction that somebody could take out there that people just don't take?
And that's the one that I talked about earlier, was that the home credits, especially for 2023. I know a lot of people are going to overlook that because the fact that it had been $500 for your lifetime limit. And now it's going to be $1,200. And so people replacing a door or windows or even putting insulation, that will help, that will qualify for that. So I'm going to say that's probably the most overlooked credit that's going to be for 2023. And especially renters, because I don't think renters think that they can take that type of credit.
And we have to assume in those cases, say, for instance, I wanted to replace a hot water heater. What standards does it have to meet to be eligible for the credit?
Well, it needs to be, I would say, make sure that it's in one of those Energy Star rated hot water heaters. You know, you want it to be an energy efficient.
Okay.
You know, or like some people are using tankless, because the tankless, you're not heating that water all the time.
Basically, all your big box stores are only going to sell the Energy Star rated.
Mhm.
Pretty much can't find one out there that's not going to be Energy Star rated.
Right.
So if somebody has their refrigerator go on the fritz and they replace it with a new energy efficient refrigerator.
No, a refrigerator is not qualifying. It has to be something for your whole home. So that's why I said, you know, water heater or insulation. It has to do, you know, like a stove or a refrigerator doesn't stay with your home.
My teens practically live in the fridge. Does that count?
Ah,
If that was the case, then the PlayStation would count and, you know, everything else.
Well, Lindsay, I mean, as you know, you're transitioning over as a 1099 person. You know, you've spoke to Heather, but what is that one aha moment that you've had that Heather filled you in that might pass on to another small business owner?
I mean, I think probably the home office, ability, to be able to use that home office expense, when you have that capability of working from home, that's been really, I wasn't aware that you could do that if you had an actual office space. But since I can actually use my home as an office space, that's nice, to have that ability. I would say that was probably the biggest thing.
So
For
Heather,
me.
what is that room on home office? And is that only for 1099 people? Or
Yes, the home office is only for, well, it's not just for 1099 people, it's only for sole proprietors.
Okay.
So you have to be a sole proprietor to claim that home office.
and what does that home office look like? What's the rule behind it? And
So I'm a little confused by what you mean by the rule behind it.
okay, does it have to be a separate room? Can it be included in another room?
So it doesn't necessarily have to be separate, but it needs to be a dedicated space that you only use as an office. You don't use it for anything else.
All right. And
Okay.
a home office is, I watch TV while I'm working,
Yeah, no.
but I use internet while I'm working.
Right, but you're using internet while you're working, but you still need a desk. You need a dedicated space. It must be a dedicated space that has a desk, that has a computer, that you go there, you're only working there, you're not using it for anything else.
But you get to take a portion of utilities.
You do get to take a
your
portion of
electricity,
utilities. Mhm.
Or internet. For those
Internet, utilities.
landlines,
It would be internet, or it'll be your utilities. You can't do your telephone, but who has a home phone anyway anymore? That would be your electricity, gas, water, any maintenance, your HOA, insurance, your mortgage interest, if you have that, your property taxes, anything associated with the upkeep of your home. You get to take a percentage. So if it's just a percentage of your house based on the square footage of what you're using for that office space, and then the total square footage of your home.
All right, in that same vein then, most of us, I presume, have a laptop or desktop, whatever it is that you're using,
Mhm.
but you use it for multiple purposes.
And that is a hard part. But again, when you have a home office, it should be something that you know that's dedicated to you working on that. It's not, because I know at my house where I have my desk, I only do business work there. I'm not going to sit at my desk. I don't have a TV in that office. I have nothing. So it is a dedicated, I don't take the home office deduction, but at home, when I want to work, I need to have no distractions. So in my office, it is just a desk. There's nothing else there. And I only use it to work from home.
Well, I'm gonna put the envelope here. I'm sitting at my laptop,
Mhm.
looking at the presentation in my study.
Okay.
I'm no longer working. I'm retired, but I was I was an insurance agent for about 10 years.
Mhm.
And part of that time I was working for myself as an independent agent. Still, the laptop or its predecessor, I did work for my insurance there. My bank account is on the computer.
Mhm.
I don't use a handwritten ledger anymore. I don't know who does, but they always provide that with your checks, but I haven't used it in years. I do written. My wife and I have been involved in a marriage program for years and years. At one point, we were the national lay leaders for that organization. So I did all my correspondence for that organization on my laptop at the same time that I was also using it for my business, for my bank accounts. So how do I apply that? Does that make it ineligible to be used?
Well, okay. So we're not talking about now when you're retired, right? We're talking about when you were working.
I'm talking when I was, not
Right.
now, because
Yeah.
now.
So
worried
as
about that
long
much,
as,
but-
here's the thing, is the majority of the time that you're spending in there related to your work? And that's what it really needs to come down. Is the majority related to your work, or is it not? If it's not, if 90% of your time working in there is not related to your job, then it's not a home office. It really needs to be a dedicated space that's all you're doing is you are working there.
I'm still gonna push the envelope. Um, I mean, you're the
And
expert,
really,
so
it
we're,
comes down to how you're going to present your case to the IRS, really, because it comes down to, do you feel it's justified or do you not feel it's justified? You can take the deduction, but then it comes down to, if you were audited, would the IRS say, yes, this is a dedicated workspace for you?
yeah, well, I mean, I'm still gonna ask the question, all right? A workday typically is 8 to 5.
Mhm.
Maybe a couple extra hours somewhere along the way, maybe you end up working 50 hours a week instead of, whatever, or 60 hours. But there's evenings, there's weekends. And so I could be in my study on an evening doing correspondence for the marriage program. I could be working on a Saturday morning, calling clients. So at what point do you look at it from a tax standpoint to say, well, when was it in office and when was it not? How much of the time were you spending there for the office? How much were you spending there for personal use relative to a work week and the time that's not a work week?
Again, it's just going to come down to what you believe.
How you
It-
document,
it's-
perhaps how you
Sure.
document it.
But it's hard to say how you document. It's really, do you see that as your workspace or do you see that as your leisure space?
Well, it depends on what time of day it is.
Well, see, and that's the thing, like my office, I don't go in there just to be in my office. I'm in there, I'm working. If I'm not, I don't go hang out in my space.
So do you have multiple computers then?
At my house, yeah. In my office, no. In my office, I have one computer that I go in and I work on. But again, I need a dedicated space to get away from everything. So I don't have anything else in there. It's just for me to go work and have no distractions.
So you do have multiple computers then, so that you can do whatever else you do apart from work
Yes.
elsewhere in the house.
Yes. I have something that I do personally, like downstairs, I have my little laptop if I'm checking emails or whatever, but
Okay.
but I have a desktop in my office, not a laptop.
That addresses the question. I'm sitting here, I've never had more than one computer ever. It's always, and for a long time since I've had a desktop, it's been a laptop for years and years and years, but still, what I'm hearing from you, if I was to ever be in that situation, I would probably, in order to justify what we're talking about here, this whole idea of home office, I would probably have to justify it with a dedicated laptop, whatever instrument for
Right.
the office use, and everything else is on a separate unit someplace else.
Right.
Okay.
Yeah, I would definitely say that you have it, even if it can be a laptop, but maybe you have two, one dedicated for there and then one for everything else.
Yep. And that makes also the cost of that unit, whatever it is a deductible expense too.
That is correct.
So just asking questions.
No, very
I mean,
good question, very good
it's more for
question.
the group at that point than for me at this point.
Right,
But-
definitely. Mm-hmm. Yeah.
Hi, Heather. I had another question. I've often advised clients to seek a professional, but I know your schedule has peaks and valleys throughout the year. Could you describe when it's best to try to reach out? Because I'm sure someone's calling on April 10th and looking for a consultation. It's not going to happen.
Right, yeah. So for tax planning throughout the year, a good time for me is May, June, July. Those are probably really good months. If you're doing 2023 tax planning. But then other months would be, I'm trying to reach out to people in November, December as well. So it's like a mid-year and then end of year if we need to do any adjustments. Those are the ideal months.
Okay, because I know I've had people put things off, and then you get to December and there's enough push to get some year-end things accomplished. And, the schedule doesn't always allow it.
Right.
Because certainly when it comes time to strategy, you want to meet you when you're relaxed and can think about things rather than, in production mode.
Definitely.
Okay, thanks.
Anything else?
Well, if we don't have any other questions, is it okay to wrap up the call? Okay. I just want to appreciate, Heather's visiting with us today and her team at HG Tax and Financial Services. We appreciate the good information she's been sharing. Just as we believe in personal consultations before making investments or insurance decisions, we want to encourage all those on the call or that listen on the call to seek a tax professional like Heather before taking the actions that have tax impact. This talk's going to be archived on our website and our YouTube channel if you want to reference it or you want to be able to share it with others. And just want to encourage you all to keep an eye out for next month's Tuesday Talk Notice. We continue to strive to deliver valuable information to improve your life. And we want to thank you all for joining us.
Thank you.